In this video, I want to talk about dollar cost average trading. I just put on several trades in my real money account where I'm personally dollar cost averaging my positions, and I want to show you how this is done. Now, in my opinion, this is one of the safest and most powerful methods of trading that I can share with you. But before I show you how I actually make these types of trades, let me give you a little background on the power of dollar cost average trading. We've all heard the famous quote, "A penny saved is 2 pence clear," right? Now, that's actually a quote from Benjamin Franklin. Of course, the modern day version of this is "A penny saved is a penny earned." Now, you've all seen this penny doubling example, I'm sure, but this is a great illustration of what we're doing when we dollar cost average trade. And it's the closest example I can think of to demonstrate what we're trying to accomplish when we dollar cost average trade. So what would you rather be given, $1 million or 1 penny that doubles each day for the next 30 days? Here's how that math works. On day 1, you're given a penny. Day 2, you get 2 pennies. Day 3, that turns into 4 pennies, then 8 pennies, then 16, and so on and so forth. After 30 days of this, on day 30th, you'll have $5,368,709.12. And that's just a quick example of the power of compounding. If we were to chart this, you can see in the beginning, yes, the $1 million is much more, but as we move through the compounding of our money, our growth quickly outpaces the $1 million and we get explosive growth. Now, when we apply this concept to trading, we start off with a very small initial entry into the market, which, if we're wrong, only loses us a very small amount. But if we're right, we can then continue to dollar cost average our position into a very large position in a very short amount of time, compounding our growth exponentially, just like we did in our penny example. Okay, let me show you how this is done in an actual trade example. In this video, I want to take you through and show you an example of dollar cost averaging. Now, we're in a position here in ExxonMobil, and if you take a look at what we've done here, we've got a married put. So we went long 100 contracts, and we have 2 puts. So the market started to rally for us today. Now, the 2 puts were soft stops, as I like to call them. They were protection to the downside in case we were wrong. Now, we have 2 of them because one put represents 100 shares, but it has a delta of 0.50. So we were only hedged. We didn't have on a perfect hedge. A perfect hedge would mean that we have a delta of 1-to-1 with the underlying position that we have on the stock. So at this point, we have a perfect hedge with our put option. The market started to rally, and you can see we're up $197 on the 100 shares. We're down $148 on the 2 put options. And so now what we want to do is we want to dollar cost average into the position. So we're going to come in here, and I'm going to just drop down to a 10-minute chart so it's easier to see. And what we're seeing here is you can see my option right here. This is my 2 put options, which is my soft stop or my protection to the downside in case I was wrong. I picked the 100 shares to the upside, as you can see here, and the market's rallied nicely. So yesterday it rallied nicely. You can see the day's trading ranges if I'll just draw a box around them. This is the first day's trading range. This was yesterday, and this was 2 days ago that I put this pattern on here, or this trade on here. And then today the market rallied once again. So we've got 2 days of uptrends, and the market seems to want to continue higher. So I want to dollar cost average in. Now, I don't want to get too close to the market, but I want to add on to my position as the market continues to rally. Now, there's several ways I could protect myself in here, first of all, and that's what we need to think about first, is how are we going to protect ourselves if the market turns around. You can see a nice area of support right here. You can see that gray line in there. That's the average true range of the market, and that would be a nice place to put my stop right in here on that average true range in there. But I want to have it back behind yesterday's low. So this was yesterday's market movement before it rallied for today's market. So right there would be a great place to put my stop. So if I'm going to put my stop there, let's come in and drop a stop in here. You can see I'm going to drop a stop, and I'm going to put that right in there at the average true range, and I need it to be the same quantity. I've got in here, I'm long 100, so I'm going to put in 100, right? Now, once I do that, I technically no longer need my downside options. I could get rid of those if I wanted to because I'm protected to the upside with my 100 shares. Let's go through and talk now about dollar cost averaging. We've put in our stop here to protect us to the downside. So the actual long position of 100 would get stopped out if the market came back and hit this 100 stop right here. How much money are we risking on this? At this point here, we're risking $1.41 per share. We got 100, so we're risking $141. If we move that closer, then we would risk less money, but then the market wouldn't have as much room to wiggle its way up and down through the trend. And we are anticipating a rise in price, but markets don't always just go straight up. Sometimes they pull back. So we're going to give this market a little bit room to grow. But also look at this. We also have some profit in here. We have some profit between where we're at right in here. We have $60 in here based on where we're at to where our stop's at. Well, this is where dollar cost averaging comes in. We can take advantage of that profit center in there, and we can start moving that 100 shares up closer by adding additional shares. That would give us adding on additional shares without actually taking much more risk than what we're already taking, right? We're not taking any more risk, but what we would be doing is spending some of our profits to buy more shares in anticipation of a continuation of the rising trend. So this is called dollar cost average trading, and we're going to come in here, and it's very easy. All we're going to do is, you can see, we can calculate that. We can come in here with our calculator, and we can draw our 50% tool in there. And if we were to double it, if we were to add another 100 shares, that would bring our dollar cost average up to this point right here at 69.33. Well, that would take it above our sell stop point, and we don't want to do that. We want to bring that down. We want that sell stop, we want our order to be below the sell stop. So we want it to be in here. So we have the opportunity to add in some positions, but not a full 100 at this point. We can only add in as many as would bring us up behind that sell stop. So what we're going to do is we're just going to come in here, and I'm just going to add 10. And I'm just going to say buy the market and see where that puts us. Now, we could do the math, but there's no reason. We're not paying commissions, so we can add 10, 10, 10, and it's not a problem. As that market moves closer to our location, we can add 10 more. Let's buy 10 more. There's no commissions involved, so I don't have to sit there and worry about paying a commission every time I click that mouse. So if I click it one more time, it looks like it's going to bring it right to about the spot I want it, which is just underneath that stop. And I've added on to my position, dollar cost averaged into my position. I still have my puts. I have my protective stop above at the location I wanted it, behind the area of support, and I can let that market run. And now I don't only have 100 shares, I now have 130 shares. Okay, now that's dollar cost average trading. And if you would like to learn more about how you can do this yourself, then visit our website at www.tradementors.com, where you can sign up for our free Getting Started trading course, and I look forward to seeing you over there. If you're watching this video on YouTube, please click the like button, subscribe to our channel, and share this video with a friend. Take care.